Hey everybody, welcome back. It's Jay-Do.
And I'm Jonah, and we're the Banking Bros, and today we are tackling a big one.
We're back, and we're diving in head first with Dave Ramsey's absolute disdain for whole life insurance.
And more specifically, we're going to talk about his refusal to acknowledge how it actually works when you see it as a banking system or when you actually just see it for the real definitions that
now let's be careful,
provide,
Jonah.
right?
We're not here to throw the shade yet. Let's see what he has to say. We respect Dave for the work he's done in other areas, and then we're going to let him stay in his lane when we're talking about control of money.
Yeah, all I'm saying is really when it comes to the strategy that we teach, and which is using properly structured whole life insurance for the infinite banking concept, creating your own banking system, Dave's words and sites and videos are just a little off.
He's loudly wrong.
So today we're going to walk through just some few things on his website, right? Some of his articles that he's put out, some of the breakdowns that he's got, and we're going to look at how he views permanent life insurance. So we'll break it down. We'll kind of go line by line. We'll put up his site and some of the other things. So if you're watching on YouTube, you'll be able to see it with us. If you're just listening to our podcast, no big deal. We'll read it to you. And we're going to show you what he says, what he gets right, what he gets wrong, and what he doesn't tell you about how wealthy people actually use these policies.
All right. So as we jump in, ladies and gentlemen, reminder that you can always get a one-on-one conversation where we can answer your questions. We teach the save and spend system here. It's code cracking cash flow, guaranteed ways for income for your whole life. That's what it's all about. And now let's go to DaveRamsey.com, RamseySolutions.com, Ramsey.com, whatever it is.
Yeah. So if you are watching over on YouTube, they've got a lot of articles. So right now what we've got pulled up is this article on life insurance. Says it's a 28-minute read. Says it came out 2 months ago.
Okay, June 24, 2025. This is August 2025. So this is fresh off the press.
Yeah, so it's the main types of life insurance explained. It's actually by one of his substituents. I don't know the correct word. It's this guy by the name of George Camel.
That is definitely not a word.
Yeah, whatever. But
yeah,
George is everywhere these days.
Yes, he is. So Dave is planning out his legacy plan. We've seen his daughter on there, his middle daughter. We've seen George. We've seen in the past Anthony. We've seen in the past Chris, I think his name is.
Mm-hmm.
A couple of different guys. But George is obviously the favorite child right now, I think.
I
by
think
looking
so.
at Dave's stuff.
He's kind of everywhere. So there's lots and lots and lots to go on in the website, but we're going to start at the paragraph describing permanent or whole life insurance. So for those of you who are listening to us, driving on the road, on the way to school, man, school season started back. Traffic is crazy in the morning. We're going to read it for you. So first paragraph here, let's get this out of the way. Permanent life insurance. Dave's site and George say it's a ripoff, plain and simple. But here's the thing. It's a sneaky one because you'll see these products marketed under different names and slight variations. But at the end of the day, you'll probably put more money into these policies than you or your loved ones will ever get back. Front center. So let's talk about that first paragraph. Let's talk about what our thoughts are on exactly what they said.
Okay, so here's my first take on it. Round one, ladies and gentlemen. Here we go. All right, we have to understand that there are differences to whole and permanent life insurance. Permanent life insurance is an umbrella term that encompasses whole. Capital W, put some respect on it. That is a type of life insurance. It does something different than universal life insurance, which is the other type of permanent. Two types of permanent. Now, underneath universal life, there are variations, as they say.
Yep.
Okay, whole is different. Universal has modifiers like equitable, variable, indexed, and those are all adjectives. In English, Jonah, an adjective describes the noun.
Mm-hmm.
The noun is universal.
Yep.
The adjective, like indexed or variable, are the describers, and they do different things. Okay, the next thing, I'll jump into it. But at the end of the day, you'll probably put more money into these policies than you or your loved ones will ever get back. I'm going to let you handle and tackle that one, then I'll come back.
Yeah, so this statement on the website written 2 months ago is absolutely and utterly incorrect when it comes to whole life insurance. Because of the variations inside of some of the permanent life insurance products like Universal, like Jeremiah just mentioned, possibly this could happen. But inside of whole life insurance, this statement is absolutely, utterly incorrect. I got a sound for that. Absolutely and utterly incorrect. And let me explain to you why. Whole life insurance is the only insurance product that guarantees a check as long as the policy is active. Guarantees. The only one. I do not care what other type of insurance you are considering or thinking about. I'll name a few. I've got some dental insurance. I've got vision insurance for my wife. I don't wear glasses, but she's got it. We've got health insurance. We've got pet insurance. On the last flight I bought travel insurance. I've got cell phone insurance. I can keep going, right?
Yep.
I've got lots of insurances, and these insurances possibly could be the case of what they're saying here. Possibly, I'll pay more money into the insurance than I'll ever get back.
Now, they put the word probably, which is a different word than possibly.
It is. So They said probably. Now, here's why on those insurances. Those insurances are if insurances, IF, okay, for all those who are listening. And the reason I say they're if insurances is because you only get the payout if the bad thing happens to you. If we need new glasses, new contacts, the eyes go bad, we have to use the insurance, then we get a payout. If. It's not a guarantee that it'll happen. If I get into the car accident, then I use the insurance. Right. But I'm actually actively trying to avoid that. If the flight's delayed, but it's not a guarantee the flights are going to be delayed, right?
Yeah.
If they lose the luggage, if I get hurt at work, if whatever it is, I need to go to the hospital. It's not a guarantee. And so in that case, their statement, you'll probably put more money into the policy than you'll ever get back. I might agree with them. It's still tough. Probably is the wrong word for me. It's possibly. However, in whole life insurance, it's the only insurance, the only one that's not an if. It's a when. Whole life.
Capital W.
You will pass away. Whole life. The thing ends at your end of your whole life. You will use the insurance. And so to say that you'll pay in more money than the benefits of the insurance is just big time.
Yeah, so what I'm seeing here and the way he words his website is for regular people. This is a podcast for regular people.
Yep.
But what I see here is, without getting political on the topics, this is the Donald Trump of explanations.
Yeah.
It's the Donald Trump of explanations because he's trying to sound as generic as he can.
Yep.
Because that's not how whole life insurance works. There has to be, everyone knows that insurance means you put in 1 and they pay out 2.
Yep.
Okay, that's why you have insurance, okay? Your little check makes the insurance company write a big check. Okay, so and the reason that they say you or your family members is because let's get into the savings component or the cash value component. We'll get there shortly. But let's go to the next section. Jonah, read us off something off RamseySolutions.com on the life insurance page and the types of life insurance next that we can tackle. Yeah. Round number 2.
So he talks more about life insurance. Again, if you're watching over on YouTube, you can see it on the screen. If you're just listening to us, we'll read it to you. Now, some of the information about whole life. So this is important. The header now is whole life, not permanent. So we're going to rule out universal.
Yep, here we go.
He's talking about whole life now, and some of the things he says about whole life are exactly correct. So, at the top of the permanent life insurance mountain sits whole life insurance. As the name suggests, whole life insurance is coverage that lasts, wait for it, your entire life. Yep, all of it, but here's what that really means.
Hold on, it doesn't say but. It just says, here's what that really means. So first off, they have now corroborated your message from round 1.
Yeah.
It's there forever. It must pay out.
Yep.
So their previous idea,
yep,
because permanent was included, is different now. Whole life has to pay.
Yep.
All right, they've said
this is whole life, not permanent anymore. This is whole.
We agree.
So then it says there's a bold header, lifetime coverage. It says whole life insurance provides coverage for the whole life of the insured as long as they pay for the coverage, as long as they keep up with their premium.
Which is the exact same thing as any other insurance.
Right.
As long as you have paid for it, there will be a benefit.
Right.
Everything else is a win. Whole life is everything else is an if. Whole life is the only win. So that is a throwaway sentence.
It is.
It's only a keeper. The reason I'm going to like it and I'm okay with it, it's a keeper is because That's not how it works in universal necessarily. But obviously, you have to keep up with the premiums to get the payout.
For the thing, right?
That's how it works at State Farm.
Netflix will only allow you to log in as long as you have paid the premium. Duh. Look, that's how it works. If you paid for it, you have it, and if you don't pay for it, you don't have it.
Okay,
this is simple. Okay,
all right.
Let's
so
get
we're good.
To the next one.
We're good.
All right. I'm going to prep everyone to listen to the next one. I'm going to prep them with the sound early.
Whoa. Okay.
Investment or savings. This is the next bold header, and it says this type of policy. Reminder that we're talking about whole life specifically. We are not talking about universal. This type of policy combines life insurance coverage with a savings or investment account.
Okay, I think that is miscategorized. That is miscategorized.
I agree.
Okay, so cash value. Cup number 2, if you're watching us, if you've seen our 3-cup setup video, look for it on YouTube. Premium red cup, cup 1, buys a permanent and guaranteed benefit. That's death benefit, cup 3. Cash value is really what this is called, not investment or savings, miscategorized. This type of policy combines life insurance coverage with savings or investment. Incorrect. Incorrect, categorically. We have bought something that must pay out. We've established this. Cash value, which they have a whole nother subheader for cash value. We're not even there yet.
We're about to hear the sound again for that one, though.
Are we?
Yeah, for sure.
Cash value is the equity. How much of the total is paid up, paid off, or paid for?
As I read through this website, and as we read it for you on this podcast and show you this website, there's so many things as I read them that are so gray area.
It's the
middle ground.
It's the Dave. What's his name? Donald Trump. I couldn't even think of the name. It's the Donald Trump of explanation. That's not what that means.
Yeah, it's so many areas.
Yeah.
Okay, let's go to the next header. Premiums. You ready for this?
Okay.
I hate this. This is like the biggest pet peeve I have. Premiums.
You have a lot of pet peeves.
He said I do, but this one is so bad. This one drives me up the wall. Costs is a sentence. You ready?
Yeah.
Costs are higher than term life insurance, period. That's the end of the sentence. Again, you remember what we just said about Netflix? Duh. Buying the house is more expensive than renting. Duh. Buying the car is more expensive than an Uber. Duh. Like what? Like why would you waste a sentence on that's? Oh man, it drives me up a wall.
Okay, and you're also now term insurance. Now that's one part of it, Jonah. The other part is costs are higher than term life insurance. Yeah. It's not the same thing.
It's right.
It's not the same thing.
The same thing.
Are we okay
Bananas
with?
Are costing more than apples these days
because it ain't the same thing.
It's not the same. They had to go to a different spot to get it. It's harder to get it. There's a tariff. Whatever.
That's saying is like fruit should all cost the same.
Yeah.
And bananas and apples, they're not the same fruit. Yeah.
They don't grow in the same spot.
Okay, next sentence I like. Premiums remain level for as long as the policy is enforced. That's huge, and that's a positive. And the reason is because we're contrasting that with universal life insurance where cost rises, okay? Cost rises. Here's the slight problem. Premiums remain level. Premiums can remain level in universal life, but cost increases. We have to nuance that. Premiums are not the same as cost.
That's right.
The cost can go higher than the premiums. Then it has to cannibalize itself or something has to give. Something has to give.
Why we use whole life. Let's go to the next paragraph. We're not even going to make it through one page of his website. We're going
to have a 30-part podcast.
Okay, cash value components, the next header that they've got under the whole life section. This is about whole life coming from Dave. Whole life comes with a savings account.
No.
Hold on. No. That is supposed to grow, not supposed to grow, over time and can be accessed through withdrawals or loans.
Yes.
And then in parentheses.
That's a ding. Do we have a ding?
Yeah, I got a ding.
That's positive.
Hold on,
just want to make sure. We're good with that.
And a little money
symbol. That makes sense.
All right. And then he's got a parentheses where he gives his opinion. A terrible idea, by the way.
Okay, here we go. So let me go into this one. Are we still in round 2? I think we are because, this is whole life insurance. Whole life comes with a savings account. No, whole life comes with equity. Cash value is equity. Cash value component is the title of the subheader. Equity. There's an ever-increasing pool of money that is the part that is paid up. Paid off and paid for.
I really despise how they say whole life comes with a savings account. That makes it seem like if I purchase whole life insurance, the insurance company is also awarding me a savings account. Like savings accounts are real things.
That's why you have to know the definitions of the words. They mean something.
It's just
cash value is the equity of the amount of money you bought. You bought death benefit.
Yep.
Maybe it's $100,000, maybe it's $100 million. Cash value is just how much of it is paid up, paid off, or paid for. In a house, we'd call it equity. We would not call it a savings account.
No, it's not a savings account. It's
we call it equity.
Okay, and then he says the savings account, which is already incorrect, is supposed to grow over time. So we got to stop there.
Has to.
Guaranteed to
it's
grow
the equity.
over time. Any insurance company we've done podcasts before where we've pulled up insurance companies' websites and we've seen how many clicks it takes before the insurance company says that cash is very guaranteed.
2 clicks,
and
3
it was
clicks.
2 clicks, 3, right? It was like 5 different websites. Nothing was more than like 4 clicks.
Yeah.
Before the insurance company said this is guaranteed.
Do you guys remember what insurance means? It means guarantee. The reason we bought it.
I think let's have some fun for the people who are watching today. Let's do one insurance company. I'm putting you on the spot. Give me the insurance company off the top of your head.
We'll go with one that we don't use normally, but everyone knows, New York Life.
I love it. So again, here's what we're doing. I'm going to go to newyorklife.com.
So we don't even know where this is. It's not contrived. We did not build their website. New York Life is something everyone knows.
Put it on the screen. I'm going to see how many clicks it takes before New York Life tells us that cash value is guaranteed. So not supposed to grow, Dave Ramsey. Guaranteed. So let's see. Let's scroll around here. We got what we offer, how we help, who we are.
Let's try what we offer.
Let's try what we offer. So this is 1 click, everybody. They offer insurance.
Insurance.
So let's hold on.
No.
Let's look at the bottom. Learn about life insurance. You can create a temporary, long-term, or permanent that meets your needs. Okay. Let's go. Oh, they have a life insurance button
just click.
or an insurance button.
No, let's click life insurance.
Life insurance button.
Okay.
2 clicks. Find the right policy for your needs. Okay.
Go
Let's
down,
scroll
maybe.
a little.
Cash value
here we go.
to use during your lifetime.
2 clicks. Cash value to use during your lifetime. Let me make it big for all those in the back. Permanent whole life insurance has accessible cash value that is ding, 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 guaranteed to grow. Let's go back to Dave's site here.
Oh, no.
What does it say
Don't
again?
do it to him, Jonah. Don't do it to him.
What does it say right here? It comes with a savings account that is incorrect.
It's a guaranteed contract, folks. It says there right on the website.
Now, again, we said at the start of the podcast, we're not trying to go down his throat. We like some of the suggestions that he has, especially when it comes to paying off debt. But when you look at an article that he put out 2 months ago on his website, this is wrong. That is not correct. Okay. Right? I mean, just simple as we can be. That's not correct. The words that you use mean something. He is a global icon these days. He's 100%. Got all these followers, and he's putting out articles that are not correct. This is not right.
Yep.
Right?
Okay.
And that's the problem.
Let's move on from, I want to jump over the top of loans or withdrawals because that gets really nuanced, and I think it's just too deep for this particular episode, and we cover that in 90% of our episodes.
Yep.
Okay. Death benefit. A payout is guaranteed. Why is it guaranteed here?
Oh,
but it's not guaranteed.
On a second. Now the benefit's guaranteed. But
hold on. Back up.
I'm right here.
No. Keep backing up.
Okay,
fellas
keep backing up.
And ladies out there, hold on. Okay.
Right here?
Yeah, lifetime coverage.
Yep.
Hold on. Where did it say? Hold on. Okay. No. That was in the universal section. The permanent section.
Yeah.
Okay. As the name suggests, whole life is coverage that lasts your entire life. Lifetime coverage, whole life guarantee provides.
So we're down to the death benefit. He's good here.
All right.
It is interesting that he says death benefit. Oh, he used the word guarantee. He used the right word this time, but when you're talking about
cash supposed.
Value, he's supposed to be. He didn't say that.
Yeah.
Okay. So
all right. How it works with whole life insurance, you buy a policy and lock in the premium, yes, and benefit amount for your whole life. If they don't have riders on it to have an increasing benefit, it will lock in. So the face amount day 1 would be locked in. We put riders on our policies, Jonah, that increase the death benefit. All right. Each month when you pay, you can pay annually. So that might be misleading to some people, but you can pay annually, or your mode of premium can be semi or quarterly as well. Each month when you pay your premium to the insurance company, yes, a portion of that premium goes into cash value. Incorrect.
I got it.
Incorrect.
Not right.
Whole life insurance is a pool of money that you bought with premium. Yes, cash value is the equity. Is how much of that Permanent insurance is paid up, paid off, or paid for. Does not go into cash value. Okay, that you hope grows during the life of the policy. Is that what the insurance company website said?
It did
You
not
can hope.
say that.
You can hope.
Right. Look at this.
He said he pulls it out so you can see.
This
All right,
is crazy.
put it on the screen. Or is our producer
We got it.
going
Let
live?
me
There we
make
go.
it big for the people who are looking. Look at this. A portion of the premium goes into cash value. That's incorrect. That you hope is the craziest word to use. Grows during the life. When the insurance company cite 2 clicks, New York Life, 2 clicks, guaranteed to grow. Dave says you got to hope, right? Then he tells you to use mutual funds that are going to get you percentages he made up. That's hope. What in the world are we talking about, dude?
Okay, that's probably why policies like this are also called cash value life insurance. You can call it that if you want. Doesn't bother me, but it probably doesn't help you understand what the words mean. So that's fine. You can call it cash value life insurance. When you die, we got to win. The beneficiaries get the death benefit. What were they supposed to get?
Right.
Okay, all good.
That was
but what were they supposed to get?
That was the agreement from the jump.
Okay.
Right.
We'll dig into this more in a bit, but think of cash value life insurance as a savings account. Now, you can think of it as that if you like, but it's not a savings account. It's the equity of the death benefit that you've paid up, paid off, or paid for. You're depositing money into every month. I think that's fine. Now, it's just a thinking exercise, so that's cool, but it's a pool of money you own, yes.
Yep. It's good.
And can access or borrow against, yes.
Also correct.
The longer you have the policy, the more cash value the policy has. So why was it hope?
Hold on.
Why was it hope?
Why is it hope and supposed to?
What
just
happened?
To contradict yourself 3 sentences later.
But why did you do that? It's because as long as people pay for it, well, what did you buy it for?
Right.
If you weren't going to pay for it.
Right.
As long as you pay for it, they'll have movies on Netflix. Well, yeah, why'd you buy it?
Right.
Yeah, hey, be careful. If you don't buy it, they'll stop giving you the movies. We know.
Right.
Okay. Pros, whole life covers you for your whole life. Correct. The policy stays in effect until you die, of course, or stop paying your premium, of course. That may sound good until you read these cons. All right. Well, I'm good on the pros.
I'm really good for the pros. I'm ready for the cons.
Cons. Whole life is a ripoff. Simple as that. Wait, what's the con?
It's not a con. That's an opinion statement.
Life insurance has one job. Life insurance can have way more than that.
Yep.
To pay your beneficiaries if you die. Hold on.
Which they said will happen guaranteed. So it seems like if it's got one job, it's doing its job real great.
If it has one job, it's doing it real great. That is correct.
When they pass,
life
it's
insurance
guaranteed
to pay your beneficiaries if you die. Well, it's a when in whole, not an if.
Wrong, incorrect word.
Yeah, it's
when you die. Everyone
when you die.
passes away. Every single person
and they have to pay.
Away.
We just covered that. Whole life is expensive because you pay for it your whole life. Ooh, that's Donald Trump. That's Donald Trump right there.
Yeah.
Well, you don't have to keep paying for it your whole life. You can pay for it and be done.
Yeah.
Day one, which we don't.
I also don't
suggest.
call things expensive just because I have to pay for them my whole life.
I have to pay for food
want
for my whole
to
life.
Eat.
Yeah.
I'm going to pay for food my whole life. That does not make food in general expensive. It makes it important. It makes it a budget line item that I need to pay attention to. But I've got options. Right.
Okay.
I mean, I don't make it. It's not expensive just because I have to pay for it my whole life. It's just tricky language.
Donald Trump.
Yeah.
Okay, this is CNN, Donald Trump, and Fox put together. Whole life is expensive. Let's read the whole sentence because we got to like a hyphen.
Yep.
Whole life is expensive because you pay for it for your whole life, but you probably don't need the policy for your whole life.
That's crazy work.
But
you.
When will I die? I will die at some point. Why won't I need it?
Hold on, let's go back. I mean, to me, it's just tricky language, everybody who's paying attention. But again, I'll repeat some things that he's saying that just they don't mesh in my brain. You can leave us a comment, right? Reach out to us if they're meshing for you.
Let us know if we're reaching too far. Are we messing with a guy we shouldn't be messing with? Is he saying the truth? What's going on?
Whole life insurance has one job: to pay your beneficiaries when you die.
He says
but
if.
Then, he says if. It's the wrong word. When you die. Everyone dies. It's not. Does anyone disagree with when you die as opposed to if, right? If you're saying if you die, don't send me an email or a comment at all because that's not correct. When you die. Then it says, but you probably don't need the policy for your whole life. That doesn't line up to me. It's got one job. It's going to pay when you go.
But you probably don't. But your family probably doesn't need it.
Yeah, but you probably don't even need it. What?
Your family should get to your funeral and clean out your house with their own money.
Right. And because part of your premium is used to grow your cash value, not how that works, you're paying more for less insurance.
So that is that's a logical fallacy?
Yeah.
And is that correct? Our sister would know which logic that violates. Okay.
Here's the thing about it. I've realized that in the internet age that we live in, the people who can talk the loudest a lot of times get the most followers, regardless if their information is true or not, regardless if they've done their research, regardless if they've have editors to review the articles they put on their website, right?
Man.
Like but they can talk loud. And so they talk really, really, really loud and they get all these followers. And then you go analyze what they are saying and you're going, there's like 30 things wrong.
You're like, Dave, are you okay with what's on your website?
Yeah, there's like 30 things wrong with 10 paragraphs.
This is no insurance company would agree.
Yeah.
The people that he works with, which is probably a great company for level term insurance, he's always talking about Xander for 20 years, they wouldn't agree with this.
Nope.
And they're letting it out. So in some way, they at least rubber stamped it because that's not true.
Yeah.
Right. That's not true.
If we sent this article to New York Life, we put up their website, or to some of the companies that we use, their compliance departments, they would tear it apart. Please do not put this on your site. This stuff is not true.
Now, of course, they're not attacking New York Life.
Yeah.
But New York Life, the contracts, the 200 years of policies, any whole life, this is not correct.
Right.
This is not right. And get this, Dave says, that extra amount you're paying into whole life insurance. Remember, extra means what you'd pay beyond term, because according to Dave, it's the same product, or whole life is unnecessary, which we disagree with. The extra amount you're paying into whole life policies also doesn't gain as much cash value as it would if it were invested in good growth stock mutual fund. Is that a guarantee?
The problem is that the
Which
insurance company's
company's
website said guarantee, and the word that he just used said invest.
Ooh, not the same thing.
Not the same thing. And then he's claiming that investments will outperform a guarantee. And anyone who does investments should know you don't claim basically anything about an investment, because investments go up, down, left, right, backwards sometimes. You just don't
And you
claim
can
that
only
stuff.
base it on previous performance, not historical performance, and not future guarantees.
Which again is
Not
what
a thing.
I'm saying. Hey, when you go to study for the, you want to become a CPA, you want to become a financial advisor, you've got to pass tests, you've got to sign a few agreements. And some of those agreements are your fiduciary responsibility to people. You've got to sign agreements with the state. These organizations will not allow you to say stuff like this because it's just not true. You cannot claim that this investment, no matter what it is, will outperform this. You can't claim that stuff. You don't know it. And so what that really means is that Dave Ramsey, while he is a very popular figure, does not hold some of these titles and certificates and professional positions that warrant some of the statements. He cannot hold them. They would take them from him. This is not true. You can't say that. Does that make sense? Everybody who's listening, you can't be a financial advisor and have agreed to the code of conduct for financial advisors and then put this on your website. The board who reviews that sort of thing would find this and make you take it down, or they'd strip your license from you. You cannot say that. It's not true.
There you have it. Next sentence. Does it make sense to spend more money for less coverage in a bad long-term investment? Not an investment. It's a guarantee. That was rhetorical. He says in parentheticals. The only answer is nope. We didn't get very far in this episode, but I think we just ripped him a new one.
For those reasons of going through one article on his long website, he's got a big website. I've seen charts before where he's comparing and contrasting different types of insurance that are super wrong. He likes to give opinions on these charts like he did in the con section. Whole life's just a ripoff. That's not a con. That's your opinion on it. But I've seen lots of things on his websites, and we could have, like you said, a 30-part episode diving through his website. The problem is that he gives a significant amount of opinions, and he's a very, very loud voice in the consumer world that we live in today, in the technological age. We are here and dove into this on this episode specifically to let you know that, hey, Sometimes just because they've got a really loud voice does not mean everything that they're saying is correct, right? We would like you to use this episode to reevaluate what you think and believe about money, what you think and believe about life insurance, what you think and believe about the people who are giving you the information that you're listening to. And we think, like we did on the New York Life website, doing a little bit of your own digging, 2 clicks into the website would let you know that, oh, well, a lot of what they're saying is not correct or not true. It's pretty simple to see, right?
Yep.
Which is why what we do on this podcast is we teach you the true components of whole life insurance and how it works and how you can use it. Now, again, we sometimes say, think about whole life insurance like this, which is the same thing that Dave said in one section of his website. Think about it like this. We do that too. But we also let you know of how things actually work per the insurance companies who offer these products and plans. Nothing that we generally say on our website is like made up off the top of our head. A lot of stuff comes directly from insurance carriers and companies, comes directly from the policies that we own. We read the policies that we help other people implement in their own life. We just read it. I think that's one of the things that a lot of clients that work with us really appreciate. One of the steps in our process is reading the policy to you. So if you read it, words like "this is guaranteed to be there" show up in the documentation. And that, I think, produces a significant amount of, what's a good word for it? Closure and satisfaction and
Clarity,
right? Just about what you're doing. And so hopefully that this episode brought you a little bit of insight into, man, there's some things out there going on that are just not correct. The words that they're using are not right. The explanations are not right. They're trying to paint a picture for you that's not actually how this works. And hopefully we brought a little clarity to you during this episode.
All right, we've got one more. I got a bonus round.
All right, I'm ready.
You skipped it. Go back to DaveRamseySolutions.com or whatever site we were on.
All right, I'm ready.
And it's the very last part of this article.
Okay.
Oh, and one more thing, Dave says, or George, or Xander Insurance. When you die, now we're back to when, your beneficiaries receive the death benefit. They've said that earlier.
Yep.
Okay.
They did change the phrasing. Earlier it was if.
Yeah, but they have said the beneficiaries receive the death benefit, of course. But what happens to the cash value? Equity you built up over all those years. Well, if you didn't use it while you were alive, it's gone. It's the equity.
What happens if you have equity in your home and then you sell your home?
You don't have the equity anymore. You don't have the home. You get the sale price.
You get the sale price.
The bigger number.
Which includes the equity.
Which included
that's
it.
What equity is.
That's right. Proof. Ooh. The insurance company keeps the remaining cash value. No. You got everything.
No.
Equity is part of the total.
This is crazy.
Like I said, it's a total ripoff. Who said this? Who wrote this?
No insurance company would agree. No insurance company would allow this. So again, for those of you who are listening, in order for us to be on this podcast teaching you the infinite banking concept, there are professional designations that we have. There are agreements that we've signed. There are compliance departments that we have to pay attention to.
There are state licensing boards over insurance companies. That's not correct.
Right. So here's what I'm saying. If the sentence like this, the insurance company keeps your remaining cash value, existed on our website, we would not be available to continue the podcast with you guys. They'd kick us off so fast. It's not true. It's not true, right? That's crazy.
All right. We want to shout out to our fan follow of the week. We go to YouTube often, and that's the Banking Bros if you want to find us on YT, but we're also on IG, FB, TT,
and X.
And LinkedIn. Okay, but Danya Richards, what's up? Maybe it's Dania, but Danya or Dania Richards, what's up? Shout out to our latest subscriber, and we appreciate some comments, questions, and concerns down in the chat there. Let us know what you like, love, or you are learning on our YouTube channel, and subscribe and ring that bell.
All right, folks, so there you have it. We talked through some of Dave's claims against whole life insurance, and we tried to show you what's actually really going on under the hood.
Now, life insurance is for everyone. Whole life insurance may not be for everyone. That's okay. We understand how it works, and we want to help you understand that so you can make the right decision. But if you like guarantees, permanence, growth, and flexibility, you're probably in the right place for your personal banking system with Whole Life.
Yeah, and let's be honest. I think that if you can accomplish 2 birds with 1 stone, or maybe 3 or 4, by using a life insurance product that you do need for when you die, and also can be used while you're alive in order to pay things off, buy new stuff, like our save and spend system we talk about so much, then maybe it's time to stop calling it a bad idea and a scam and just start asking some better questions.
We can answer those questions on a cash consultation where we will have a back and forth conversation with one of our coaches. It may even be us. We look forward to that conversation with you, and you can find out more at thebankingbros.com.
Yeah, or just shoot us a message and we'll talk specifically to you about your situation and how this could work for you.
Now tuned to the banking bros. Said we couldn't make it. Drink or settle. This the life we chose. Gave a lot of game. We never got a lot of things. Bow your head and say the prayer. We taught you how to be the bank.
Debt is dumb, cash is king, and we've got some questions about that because we think cash flow is king. There's a way to guarantee it, to grow it, and to utilize it income tax free, but Dave Ramsey wants you to just think that's a big fat ripoff. Let's talk soon about your specific situation and stop being generic about every product and every terminology there is in the book. Thanks for listening to another episode of the Cash Compound Podcast featuring the Banking Bros. To learn more about the Save and Spend system and to get a free cash consultation with one of our coaches, visit the links in the description below.